Good morning, everybody. Welcome to the showdown. Hope everyone's doing great. Happy Friday. I got your favorite guest join us today. Big Dog will be here doing some live trading. We're gonna go ahead and break down some charts, show you some live trading. Go ahead and implement some trades using our Pip Hunter tool. So we'll show you how exactly we use this tool to implement these trades. And then I'll also show you a great setup that me and my Discord team had yesterday on the Euro US dollar, closing 720 net pips. Okay, we went and sniped a perfect turtle soup setup. So if you don't know what that is, stick through this session and we'll go ahead and break that down what we saw yesterday on the Euro US dollar. So yeah, if you guys are ready, I'm ready. We're gonna start right after this. Good morning, Big Dog. Excuse me if it's here's some weird background music, noise in the background. I have some people outside mowing the lawn, so it's pretty loud.
What? People are working on a Friday? I mean, that's insane. That's insane. What is up with these people?
These are hard workers out here.
All right. Well, good. Good morning, Cam. And listen, man, great to be here. Thank you for bringing me back on the show again for another showdown as we go ahead and dive into some trading opportunities this morning. Traders, I hope everyone's had a great week. I mean, we had the central bank coming out on Thursday with their interest rate decision. And it actually did really nothing crazy. I mean, I've been saying this for a while here that a lot of the movement that we did see in the market was really pretty much discounted in. We saw the early rally in last week's trading, and then of course we had the Feds come out this week, and sorry, I think it's Thursday. I mean Wednesday. The Feds came out on Wednesday, and they decided to keep the rates unchanged at 5.5%. And the market had some volatility at the start, but then eventually it just started selling off, and rightfully so. I mean, we saw the same thing really happening with the other central banks when we had rate decisions on hold. And it was no surprise. But the movement that we had in the trade on the US dollar up until that point was all bullish. So we saw this big sharp bullish move in that. But if you actually look at the dollar index setup, you actually saw that the dollar index setup showed that we had a really good structure that indicated that price was going to move back down south. Let's go ahead and take a look and see what that looks like here on the chart and just give everyone a quick breakdown of what this all looks like. All right, so let's go ahead and move to the chart right here. And as you can see right here, here is the dollar index chart, the daily time frame. And this is the sort of structure we've got sitting up right here. And anytime we see the market take out the previous high, we tend to see the market trade up a little higher. But then what's happening right here, traders, if you're looking at this, and some traders they're looking at the short-term move right here and they're going, oh yeah, we're in a bullish trend. Well, yes, but when the market fails here at 127.118 right here, this is an indication that if price trades back below that previous high right here, we're heading further down south. So despite of this rally that we've seen this morning, and FYI, yes, we've had some ISM numbers coming out. We have some used jobs come out. Jobs came out this morning. Terrible jobs, right? We saw the market sell off again with the jobs support. We're just having a retest of what we saw this morning. This is a retest. We're going to continue to work down south on the dollar. I think the dollar is going to continue to work down south. So with that being said, Cameron, I'm very eager right now, before we even get started, to throw in a sell on US dollar CAD, just to get that in right now while prices. Now, before you put that in, let me just go ahead and move this to and I want to go back to the dollar chart right here. And I want to go ahead and explain something once again, but I'm going to go to the US dollar chart right here. I'm going to go down to the 1 hour time frame. And I'm going to look at something here before you make that, before you pull that trigger. So this is what I'm looking at. And FYI, we opened up bullish on the Dow this morning, so which means that we could probably look for a what we call filler gap move. Filler gap move means that we're going to probably see a risk-off trading environment in the short term. That means dollar's going to rally in the short term, and we've seen that taking place at the moment right now. What I'm also seeing right here is how prices come back and retested this breakout point right here. We had this big order block that's been created right here. And we've noticed that the market's now coming back to possibly look to reversals. Now, is it going to be reversing? Because if it takes out the swing high right here, then this could be a reversal. But then remember, traders, if we take out that high, that means that we're going to have to wait for price to come back to retest this order block breakout point right here. And if that's the case, then that means a long time before we actually get in on a trade. Now, I'm okay looking to look to sell here at this resistance level. And if I'm not right and the market doesn't sell off, then yes, we'll take out the swing high. We'll come back up here to another resistance level up here at the top. And then we'll turn around and head back to the south, and which means we'll pick up 2 or 3 orders on that and still make profit. So I'm going to, because of the session today, I'm going to bank on what I see as an overall directional bias on the dollar. And how do I know that or at least not on the dollar, but the dollar CAD? How do I know that this is an overall bearish move? Well, if I look over here on the closing price based on yesterday, all right, we can see that this low, all right, let's go back to the low, this low and that low, all right, is an indication that based on the previous market movement, that we're going to see a continuation in today's trading bearish. Now, we have had the market take out the low. So we have actually had price trade back to the low of the previous low, right, in today's trading. But now it's going to be important how this daily candle closed out. If we close out below the low, then we'll continue to be bearish in next week's trading, or at least the next trading day. So I'm going to say that we're going to continue to be bearish. I'm going to bank on us being continued bearish. It might be a little risky, but I'm going to do it. And I'll confirm today whether or not I'll be looking to get out of this trade, or we will absolutely be seeing profit in today's trading. So Cameron, let's go ahead and get a trade in here at 36.71. I'd like to go ahead and put a trade in right here.
So sell for US dollar CAD.
Sell US dollar CAD. Yep, sell US dollar CAD right here.
Interesting.
I like that comment. Did you see that? That is an attack. Attack on the big dog here. Now, traders, I want to go ahead and point this out because Cameron said interesting. So I want to go ahead and point something out right here. Look at the break right here. This break is 63 pips. Now we have a new do we have new news coming out this morning? And let's go take a look again. 9:45. There's the ISM number came out already. All right, so we got negative news on the ISM number. Market rallied based on the ISM number. Negative news. Now, is this just a retracement move of this right here? And if it is, then let's take a look at what that retracement move is going to be. So right here, we're already at the 382 retracement. So either price is going to push up to the 618 right here, and we're going to get a second order in on that, or we're going to actually see price being rejected. Now, all we're looking for is 20 pips on that trade, right? So if we've got a 60 pip move, what is a 50% correction of the? Because once this candle closed out, this is a 4-hour chart. Let's go to 1 hour right here. And the 1 hour, let's even go to 15 minutes to get some more. So yeah, we have an order block that's been formed right here. So if we go to look at this, now this is how I'm going to look at this. I'm going to take this high, this low, right there, and I'm going to go ahead and see once this candle closed out, 15 minutes, about 2 more minutes. Once this candle closed out, the next 50 minutes is going to be crucial. Why? Because the next 50 minutes will be determined whether or not I see my 20 pip profit or not, and whether or not I'm going to be added into new positions. So I'm going to watch this high and low, and I'm expecting some sort of correction move. Now, I'm going to wait and see how this plays out over the next 15 minutes. Cameron, let's go ahead and fire a new trade.
I did fire that trade for you, right? Yeah.
All right, perfect. Yes, you did. Did you?
Yes, I did. Yeah.
Okay, you better have.
I just wanted to break. I just wanted to throw a quick hint
Curveball.
here on the US dollar CAD, just because we are in four positions and I've adjusted my take profit. Is we've now taken this sell side liquidity. We're starting to see displacement. I'm expecting price to come back to premium, which is this area, this fair value gap. So all I'm really targeting on the US dollar CAD for VIP level ones, I am targeting 50%. I'm retargeting rebalance EQ. Okay.
37.
So we're just rebalancing for EQ at 36.96. That's my target for 20 gross pips. So we're targeting 80 net pips on the US dollar CAD. That's all I'm going to be targeting,
Hmm,
expecting a rebalance of equilibrium.
interesting. And I do like that level, though. I do like that level.
Yeah. Price could go anywhere in this area right here. All I'm doing is expecting price to come above the 50% back to premium, where we have a inverse 4 hour fair value gap. So this could be a key area where price could um, retest. So this is my target, but I'm going to be targeting. Really, I'm just targeting this 50% mark, which is 20 gross pips from where we're at. So that's 80 net pips is what we're targeting on the US dollar CAD.
And just for those that don't know, premium he's talking about is basically premium is actually an area where you want to look for short trades. So if Cameron's in a long, he bought it at a discounted price, right? A discount level. And so discount level means that he's just looking for an area where he's going to be looking to long the market. So he wants to long the market in a discount area and then look to take profit in the premium area, which is basically that area he's talking about. And he's talking about 50% of that. So he can actually chase after, if he's chasing after a long in the discount area, he can actually chase after the swing
Mm-hmm.
high, which is a lot higher up. But he's clearly taking some shorter profits on
Yeah.
this trade.
And the perfect trade, like Big Dog with the sell, is I still understand the sell because we're dollar cost averaging, right? And then we're looking for that reversal.
Mm-hmm.
Always the perfect sell is waiting for price to come back to premium, looking for price to retest at PA rating premium, then looking for that sell and displacement. But because we dollar cost average, there's different perspectives of how we look at the market, right?
Yeah. And a wolf wave buy this morning. We had a wolf wave buy on the US dollar CAD that's actually just paid out right now. So that's actually closed out a wolf wave sort of setup there as well. So looks like a lot of price area, and I can see how price would go back up to those levels there based on what you have there, Cameron. I can definitely see that, but in order for me to be able to put on a position, I'm more going to hold on to what I see as the overall direction. And until the daily time frame confirms that the bias is changing, I'll then go ahead and look for something different. But currently, right now, my bias is still indicating that we're bearish until I see the daily close today. And the daily close will then indicate whether or not, I should be looking at a get out of jail free card, or or we're going to be making, some cocktails for the weekend.
Yeah. And we're also seeing this oil block right here resisting a little bit. So we wanna get more confluence with showing displacement above this area to give us more confluence and conviction that price is moving to these areas. So
Yeah.
as of right now, you can see we're getting a little rejection of this order block. So we'll see what happens. Maybe price wants to rebalance because we have insufficiency here before it continues higher. So that's just something we got to keep an eye on what price does here.
Yeah, and I think what's also important, Cameron, is this order block that's just forming right here. This high volatility order block that we've got here, or this high probability order block that we've got here, setting up over here with this big sort of a candle right here that's formed. What I'd like to see is a possible reversal of that. All right, so look to see if the market can reverse. Reverse to the opposite side, right? To reverse that order block to the downside, and then have what we call a retest, right? You have that sort of breakout point, and the market comes back to retest it again. I'd like to see that happening on the US dollar CAD once we have that confirmed reversal. But
Okay.
time will tell. So, and traders, I want to just make sure that everyone understands that trading these markets isn't as simple as what we may sometimes make it out to be. Right? Sometimes you've got to have patience. Sometimes just jumping into the market as quickly as we do. We're watching the markets pretty much 24/7, Cameron and I. And so for us to go ahead and make some sort of decisions on this is pretty easy because we've already got sort of an understanding of what the markets are doing. And because we have an understanding of what the markets are doing, we can easily make quick decisions on it because we're in the markets so many times or so long during the days. But it does require patience for the structure to form before making decisions to just go ahead and trade those decisions. So I want to just make it sure it's clear that even though we're making it simple to enter these markets, it's not that simple. All right, that there is a process that needs to be taken. All right, so going back to this 50-minute time frame, I want to also point out right here, if you look at this high low right here, from here to there, we did hit the 1.618. So I do have a 50-minute swing high low right here. Oopsie, that's not the one I was pulling. We do have the swing high low setting up over here. And so just to go back to Cameron's sort of initial sort of target that he's looking for, you can see here that we do have a price that can retest the previous low right here at that area there. And in my opinion, this right here is where we could see the reversal. And look at that. That price is around about 37, right? So Cameron's looking to take profit just before that 37, the 137 level. So that's perfect area. And just so that he's confirmed that he has got he's chasing after the 50% within the premium. So he's looking at taking profit within the premium area is pretty much where sellers should be looking to sell based on the structure right here. Wave 1, 2, 3, and 4. This is 4 right here in the premium area. This should be a good sell-off right about there, 137, to see the market sell off back down south again, back down to 135.68. So it's going to be interesting to see how the market shapes up there. That's the one thing I must say. What's really enjoyable about trading is to be able to paint this picture and then to be able to identify what the markets are doing with inside structure. And then the gratification that we have is not necessarily the profits, right? The profits is just the natural sort of result that we will get if we correct. But the gratification is, I think, is more about analyzing the market, breaking it down, and actually seeing everything play out the way we actually anticipate for it to play out. And so this is what's really, nice. And this is what the battle between me and Cam. We have this battle. We talk about markets the whole time, and we discuss the market setups and so on. And the good thing about what we're doing here is that we are competing against certain things that we've seen in the market. But it's amazing how two people following the same sort of structure and the same sort of trading strategies and the same sort of concepts are seeing different entry points and different ways of where the market's going to move. And so it's unique, it's different, and it's showing that you don't have to be an FxBigDog. You don't have to be a Cameron. You can be your own trader and see different things in the market and still be successful. All right. As long as you're applying good risk management and you're applying a strategy that has a good track record to show that, yes, we can be confident that what we're doing has a good track record, has a success track record. And so that's the confidence that you have to have, that when you place that trade and you follow in a trading system or trading strategy, that you know with confidence that you're going to be making money from this. And then if you apply good equity management to that, you know that if you're wrong, you can still be right because you've got the funds to be able to ride through the wave of the market. And that's the important part right there. All right, Kevin, we're at, looks like at 36.82, so we're heading very close to that target. All right, let's move on to another currency pair, Cam. What have you got?
And I'm gonna say the Euro US dollar for last. Since I wanted to break down, as I mentioned at the beginning of the show, I want to break down the setup of the turtle soup that we had yesterday. So I'm gonna break down that last. So we're gonna take a look at the Aussie CAD, and once again, all my drawings have been removed. So
Why is that?
I don't know. It's for some reason when I opened up my charts this morning, everything just
Did you
refreshed.
open up in a different broker feed? Because
No,
sometimes you open up a different broker feed that does it, eh?
no, I just my charts was like lagging. I refreshed it and just restarted everything.
Hmm.
All right. So let's take a look at the Aussie CAD. Let's take a look at the Aussie CAD. Aussie CAD, I mean, already I could just tell what I want to do. Like I can already see a rebalance um, on the Aussie CAD, and we got buy side liquidity over here. Price is almost hitting buy side liquidity. So sometimes before we hit our external range of liquidity, sometimes we could look for a internal range of liquidity get swept before we come here. Now, that might not be the case. We might hit this area before that. But even if we do hit this area, I'm expecting a sell-off, okay? And the reason is I'm expecting price to come back to OTE. Okay? So this is exactly where I'm looking for price to come back to either 50% or below. And we could first anticipate, and there's the Euro US dollar. I just scalped the Euro US dollar for on a sell for the Euro US dollar. So I think who was it? Was it Brian that said, Brian, did you not close the Euro US dollar? Euro US dollar? It just closed right now. There it is. That just closed now. We got that retracement, looking for a rebalance of equilibrium there on the Euro US dollar. So that closed for 20 net pips. I just took that trade right before the show, and we scalped that 20 net pips. So that just closed. So now looking at the Aussie CAD, once again, we have a lot of room to the downside, guys. A lot of room here, looking for a rebalance of equilibrium. Now, a price could go ahead and take out buy side, possibly want to manipulate a little bit and continue maybe higher as we add more positions. But my longevity bias here is that we're going to see price rebalance and continue to move lower. So because of that, I'm selling with the Aussie CAD.
Okay. And so you're looking for maybe a fair value gap reversal that's setting up at the top there, and at least hoping for that structure to form.
Well, what happens is when I see an external range get taken, right? An external liquidity range get taken. What I usually see is I'm always going to be looking for manipulation, and I'm waiting for displacement. I don't trade with the breakout. I'm always looking for displacement. That's when I want to see, okay, then we can, and that's really if we're looking at a lower time frame and we're trying to intraday trade. That's what I'm looking for. But because of this dollar cost averaging, I'm really have a different perspective of how I trade compared to when I trade futures and trying to intraday trade.
Yeah.
So what I'm looking for is just that I know the longevity bias is that we're coming back to this area. Even if we take out this external range and we manipulate and we move a little higher, I know eventually we're going to get this displacement. Then yes, we can always look for breaker blocks, fair value gaps if we're looking for an intraday trade, right? A perfect entry scalp in the market.
Okay. Sounds perfect. All right. Good stuff. All right, guys. Well, let's go ahead and take a look at then the New Zealand Canadian dollar. And just before we go ahead and do this, I want to go ahead and say that I'm using ACAP's price feeds, and we do have a good partnership with ACAP. I want to go ahead and let everyone know that this video, these live shows that we do here at Traders Network Club, are sponsored by our partner broker, ACAP. And so let's go ahead and give them some love, Cameron. All right, fantastic. Guys, listen, if you don't have a broker and you're looking for a broker, go ahead and check out our website. We do have some sponsored sponsored pro offers where you can get free access to some of our trading tools and our trade ideas. Absolutely zero cost. You can see right here, up to 12 months, depending on your deposits that be made. Check out ACAP. Check our website out. Go to our website. Look for the sponsored pro membership offers, and go ahead and click on that, and you'll be able to get those details. And just FYI, our Dow, as you can see right here, we're still doing pretty solid right here. There's a little bit of a MyFixBook glitch, but we should actually be up at 15%. The data is not reporting correctly. So we've had a really good 3 months of trading, and we're definitely looking at a good start this month as well. So check that out. The Dow Remote sort of program is being offered here inside our, as you can see right inside our membership area here as well. So certainly go ahead and check that out and get connected. Go check out our website, TradersNetworkClub.com. Now, traders, as we go ahead and take a look at the New Zealand US dollar, sorry, the New Zealand trade against the Canadian dollar, we notice that price is coming back up to retest this area right here. I'm also seeing a sort of a falling wedge forming right here as well. And the falling wedge has got sort of a resistance area right here. And then, if I do this, I'm wedging it up a little bit. But you can see right here, that's actually more of a wedge than a falling wedge it is. But if you look over here, we have not broken out yet. We certainly have not broken out. Now, if I look at the previous trading day, we had this big, we had this bullish candle, but today's been a real strong bullish move in today's trading, and started off down here around about 81.36. Now, I've always said this before, I'm going to say it again. What goes up must come down, all right? And what forces the market down? Well, resistance. So I always look for the market to find a little bit of resistance here, and I'm seeing resistance here at this area. Now, this is not a swing high. The swing high would be up here at the top, which is confirmed here with his previous lows. We have a swing high right here, and we certainly have not seen price test that level. But we're getting pretty close there. And even I like to look at the bodies. And even these bodies are going to act as a little bit of resistance right here. So if I look over here between the body and the swing high, we can see we've got about 30 pips. Now, I don't mind selling the euro, the New Zealand CAD right now, because if I go up another 30 pips and then the market comes back down to retest this breakout point right here, I'm okay with that because I'll still be making profit. So I'm not afraid of these big bullish moves right here. It doesn't scare me. A lot of traders will be looking at this and go, oh my goodness, I've got to go ahead and buy this. But the problem is you'd be buying at the top of the market, and that's not a good idea either. Now, if I go to my 15-minute time frame, I'm really seeing some price rejection right here. I'm seeing a lot of stuff happening right here in the market right here at this level. So clearly there's a battle being taking place right here. So Cameron, I'm going to go ahead and sell New Zealand Canadian dollar at this point. And even if it comes back and fills up, if you look at the fair value gap on this right here, we got a nice little breakout right here. So let's go 1, 2, 3 over here. Here's the fair value gap right here. And you can see right here that we can still see price coming back inside this area here. And so I'm going to go ahead and say, let's sell. And Cameron just took a sell right here. You can see there. And FYI, if you're not connected to our Telegram channel, check out in the description of the video. There's a Telegram channel where you can actually get all these trade ideas that we place in. And just for everyone's sort of reference, everything we do here on this channel is for educational purposes only. We're not NFA regulated, so we're not telling you to buy or sell. We're just showing you what we're doing. And if you choose to follow, that's up to you. Be responsible in your trading. Make sure you're absolutely responsible in your trading. Now, if we take a look at the way we're set up right here, I am expecting that correction move. Like I said, if price moves up another 30 pips, that'll be okay. I'll be re-entering on a second entry point, and I'll probably look for money on the second pullback. So let's see how this plays out over the course of the next 24 hours, 48 hours as we move into the weekend, and see how this position is handled over next week. So remember, if you're going to follow us on our Telegram channel, remember that if we close out our positions, you will know about it if you are connected to our Telegram channel as well. So you can follow along the way too. All right, Cam, you want to go to the euro?
Yes. So I'm going to go ahead and break down the setup that we had yesterday. Oops, my thing's messing around with me. Let me pull up my Discord here. Give me 1 second here and pull this up right here. So the euro US dollar, there it was. All right. Okay. So as you can see, this was the setup that we had. This was our external range of liquidity. And I'm going to go ahead and break this down on the chart as well. Okay. And one thing we also can understand is wave structure. We can use wave structure with turtle soup as well. What I find is manipulation happens in the fourth wave correction, right? And that's when we anticipate this fifth wave expansion to go ahead and hit our external range of liquidity. So I'll break it down on the chart now. So you're on the Euro US dollar. Okay. This is the Euro US dollar. Let's go to the 4 hour. We saw here on the higher time frame. Is that coming from you or me? What's that? Echo sound. Now what we had here, right? First thing I want you to keep in mind, you see these projection points. This gave me a good bias of where I was projecting price to go to. So if I zoom out, we can see external range taken, sell side. And we had some displacement. Then I weighed and we saw a retracement and then another move, right? This is the manipulation right here. So using standard deviation, we had projection points. This was my area that I like to target, looking for this. And this was setting up perfectly in this daily fair value gap where I expect external liquidity range. Okay. So this was my target, this area right here. Not only that, we have a big area that's in balance. It's a daily fair value gap. Because it's a big area, I use consequent encroachment to use as the 50% mark of this imbalance. That was my exact specific target, was this consequent encroachment. Now, when we were setting up, first thing I noticed is that we had this third wave expansion and we had this fourth wave correction. And what I saw in this fourth wave correction that gave me a lot of conviction that we were going to move higher, and that's why I target 720 net pips, is I saw a stop rate, a manipulation. When price comes back down, takes out internal, takes out this internal sell side before it did not take out this external. So before price hits this external range, it takes out this internal liquidity. This is smart money right here. Right? This is smart money. What do we call all this right here? This accumulation. What do we call this, right? We call this dumb money. Smart
Oh
trade.
crap! Don't say that because that's where my money's at.
This is where the smart money traders come in. They see stop rate. All these, and for those that don't know when I'm referring to a stop rate, is that when we have retail buyers coming in the market buying, they're setting their stop losses below these lows, right? Below these lows. Price comes, takes out these sell stops, generates liquidity or hunts liquidity, and then now we're hunting for the external range. Now we've gathered liquidity. We're now hunting that external liquidity range, which my target was that area. And that is what we call a turtle soup. When price takes out an internal range to then target an external range, this is the expansion that we're trading. That's called a turtle soup. And that's how we target this area for 720 net pips. And when I'm talking about wave structure, like I mentioned, it's usually the fourth wave correction is where we anticipate this manipulation. Then we expect this fifth wave expansion, which most likely this is the area of the wave structure. If some of you, I know you like to use wave structure, like wave structure, that can definitely help key those setups for the turtle soup. Now, what we see now in the Euro US dollar? Well, I just scalped the Euro US dollar because what we're anticipating is we hit this external range liquidity, we got a rejection. I knew, okay, from this price leg, from that low to this high, I knew we were gonna get a rebalance of equilibrium. We haven't hit 50% yet. We can expect price to come to back to discount, targeting what areas? Well, first off, what do we see here? What is a key area that I'm seeing right now? Well, yeah, we see fair value gaps, breaker blocks, all that. But what do we actually see? What's a magnet to the market, right? Relative equal lows. We have equal lows here. This is equal lows. So this this right here is, I know there's a lot of right here. Prices want to come sweep this area, and that's in discount. We also have a fair value gap below, so we can get a sweep of liquidity and retest to rebalance this fair value gap. So these are all key things I'm looking at, right? These are all key things I'm looking at, what we can be targeting. So what we could do here on the Euro US dollar is I'm going to continue to sell. I'm going to continue to sell because I do have some conviction that price is coming back to rebalance equilibrium. We have equal lows. So I know there's a lot of money sitting right here that price would like to come take out these equal lows. And below this, we have some insufficiency. So there's a lot of stuff that gives me conviction that price can move lower. So we're going to go now and sell the Euro US dollar.
Okay. Alrighty. Then that'll leave me with the last pair right here, and that is on the CAD Swiss. Now, traders, if you haven't subscribed to this channel already, make sure you go ahead and do that. Smash the like button. Go ahead and throw some comments out there too. I'd like to hear back from you guys based on our technical analysis. Give us some feedback on what we did today. So make sure you go subscribe. Click on the notification bell so you can get alerts as we go live in the market. And then also make sure that traders, you do go ahead and smash that like button. I just thought I'd do that. All right, go ahead and smash the like button, guys. All right, let's go ahead and once again, good to have everyone here on a Friday. It's always nice to break down the markets as we once again look at technical setups just before the weekend starts. So here we go. CAD Swiss. A lot of traders will be wondering what's going on with the CAD Swiss. All right, so this is the deal with the CAD Swiss. Let's go to the daily time frame. Let's go break this down. I have to remind everyone once again, we're at this level right here is a key level of support, right? And that is priced at right there at, let's go ahead and put it where price is trading right now. So that is at 66.21, right? That is that key. There is that key level right there. That swing low. Now, what has also been very important is how the market's been waving back up north. And if we take a look at how the markets have been waving back up north, this is simple. You take a look at the swing low right here, 1, 2. Prices has an internal structure. We go 1, 2 right here. Then we have the 1.61 being hit right here. We draw in the next swing. And so this is what we're looking for. We're looking for price to now complete. And let's go ahead and get the wave structure right here. We've got this wave 1, 2, 3, 4 down here. It came back to retest that level there. So 4 down here and 5. So we're in what Cameron mentioned earlier on is a very complicated wave structure because it is our fourth wave correction. But we do expect price still to come back all the way up here to around 67.90. Now, traders, just so that you know, the 67.90 right here is going to be a short-term target because we're looking at the larger structure. And the larger structure, as you can see right here, is much bigger, right? Is a much bigger structure. And so if let me see if I can just do some changes here. Let's see, price bar. All right, good. So what I'm going to do here is I'm going to take this area right here, and I'm going to go 1, 2, 3 up here, 4 down here, and then 5. And I'm going to change this now to, let's go ahead and edit this to Let's do this. Hold on. Let's change this to a bigger cycle. Let's go. Actually, no, let me do. Nope. I'm going to do cycle this. Yeah. So this is our biggest cycle right here. In fact, let's make it numbers. Sorry, I'm playing around with the super cycles here. Let's see here. All right, let's make it solid numbers here. And you can even change the color on that too to blue. All right, so there we go. So what you're seeing here is an internal structure that is forming that's going to give us that wave 3. So we have not hit wave 3, the larger wave 3 yet. We're in this fourth wave internal structure right here. And we're looking for price to go up and trade there. So trust me when I tell you, I am going to be bullish on the CAD Swiss. Looking for price to go up to around about 67.90, maybe 68, 68.30 in this area. And then in that area there, we may see a correction move. Again, a short-term correction move before the market goes ahead and takes off for a next move to the upside. So, Cameron, buy CAD Swiss at the current price.
Okay.
All right, perfect. All right, that's pretty much it. Let's go ahead and do a quick sum up of what we've got here, Cameron. What do we have here in our positions that we are holding right now? Just go ahead and do a quick recap on that.
Yep, we're selling the Euro-US dollar and pretty much at break even. US dollar CAD selling down about 5-6 pips. Aussie CAD selling. We're selling Aussie CAD, New Zealand CAD, and the only long position we have is the CAD Swiss. So selling everything besides the CAD Swiss.
Right,
and everything is pretty much about 5 pips down or close to break even.
So it's anywhere between 5 pips. So basically, we break even if you have to consider the spread. So we're basically in at market at spread, and that's the only drawdown we've seen right now. So the markets have been a little bit quiet since after the news. We're gonna have to wait a little bit longer, maybe around about 11:30. We'll get some additional movement at about 11:30. And that should be the correction move that we're expecting out in this morning's trading, as we've just come out of some news out in the US. And obviously, with that news out in the US, that would make the markets move a little bit faster in this week's or this morning's trading. So, with that being said, traders, hopefully everyone has a fantastic weekend. Make sure you go ahead and smash the like button, subscribe to the channel, and follow us on Twitter, Instagram, as well as Facebook, as well as on our Telegram channel as well. We do post on a regular basis as well, so make sure you check that out. All right, so with that being said, traders, this is FxBigDog wishing you a great weekend, and Cameron, cheerio.